Hi Dan, it's Trevor.
Trevor, can you hear me?
I can. Can you hear me?
I can indeed. 1 second. Let me just make you the boss.
Okay.
Make presenter. Okie dokie. Right. You are now the presenter, but I can only see you. I can't see your screen yet. Here we go.
Okay. Should be
We're
coming
cooking with
now.
gas. Yep. Euro USD daily we're looking at. Does that seem right?
That's it.
Excellent.
All right.
We've got about
I'm ready
another
to go
minute.
when you are, Dan.
We've got about another minute. Well, so
Yeah,
we're
okay.
on 59, so we'd better start at 9 o'clock. We like to be punctual at FX Choice,
Yes,
Trevor.
that's right. 2 more sips of my coffee, which will be great.
Yeah, absolutely. Why not? Oh, you're in a tweed jacket today as well. Very nice.
Yeah. Country look.
English gentleman, exactly. Okay, here we go. Right, well, we've hit 9 o'clock, Trevor, so I'm ready if you're ready.
Let's go.
Let's go. Okay. Hello, everyone, and welcome to another Technical Analysis webinar with Trevor Neil. Thank you for joining us. As always, we aim to get through everything in approximately 30 minutes. There may be a little bit of spillover, though. If you have some questions for Trevor, please make sure you ask them in the questions tab of your GoToWebinar window. And I know you know how to do this by now, but I'll pass the questions on to Trevor and find an opportune moment to bring the webinar to a halt and we can ask your question. There are 2 handouts this week in the handouts tab. So the first handout can be downloaded. They can all be downloaded in the GoToWebinar handouts tab. One of them is basically a chart guide that can help you understand the different indicators that Trevor uses and what he's thinking about when he's using them. And the other handout is a CFD guide, which is not really for now, but you can read it another time at your leisure because it's quite a long document, but it'll describe the different products and technical things that we offer at FX Choice. For those of you who don't know Trevor, although I'm sure you all know him by now, I'll just give you a brief intro. He's a veteran technical analyst and trader with over 40 years experience. He worked for large companies such as Merrill Lynch and Bloomberg, where he was global head of technical analysis. He's also a founding member of the Society of Technical Analysts in London, which is an institution that accredits other technical analysts. So we're in safe hands, I think. So Trevor, without further ado, let's over to you.
Yes. Okay. Great, Dan. Yeah, as you mentioned in passing there, that I was one of the founders. I was on the board that created the Society of Technical Analysts, and many years ago. But last week, very, very sadly, the chairman of the board at that time, so really the guy that drove it, died. His name was Philip Gray. He was a wonderful guy, and very sad to hear that he died last week. Okay, well, let's get on to the markets here now. So starting with the euro, and really the theme is that the dollar weakness, which had stabilized the week before last, had really that weakness seems to be resuming, and the trend looks as though it's going to re-establish itself, and this should dominate a lot of markets and cause many currencies to go up against the dollar, and some more than others, of course. Some are hitting resistance and also have an effect on precious metals, oil, and the stock market itself. So let's have a look firstly at the biggest currency against the dollar. This is a daily chart. And before I do look at that in detail, let's just look at the big picture, which I always like to do. This is what has been dominating my thinking. Second half of last year, we surged ahead when we broke out of this wedge pattern here. Then we consolidated in Q3, Q4 of last year. Then we made this break here. Very, very important and significant break. Upwards here at the end of last year and January this year, powered ahead. These are weekly bars, of course, and then we went to a level which was a predictable level. This is a Fibonacci projection, so I've measured from here to here. That's the AB move. This is the BC move here, and then this is the C up to D move here. We pushed through 38.2, went to 50% almost precisely there, 123, and that was at this 2018 high, which I've circled here, which is what is dominating the trade now as we struggle to break with that. The thing to remember is that it is bullish. The euro is bullish. We had a pullback in it, and let's look at this in more detail now. So this is the top part of that consolidation, which itself formed a wedge. I call it a wedge. Some people call it a channel. I wouldn't argue too much about that. But anyway, we went up in a narrow channel. We broke down on the 8th of January, and then we measured the width of the channel here, which is the way that we set minimum price objectives. That gave us that objective there. So we got to that on the 15th last week, and then the week before last, and then we went a little bit further. So it was the minimum price objective, came back, didn't come back to, you know, where I was looking for other support levels from this consolidation. Didn't come back that much at all, and now to me it's stabilized again, and I think we're on our way back up again. Look, what we did see in the weekly chart, we had that warning. In the daily chart, we also had the warning that this whole area here was had a severe loss of momentum. The RSI had a downtrend in it all through this period here. So it did look very toppy at that time, but only in the context of the bull run. So I think the bull market has reasserted itself. We've got that big Fibonacci projection, which I showed you on the weekly chart, but we've got a smaller one here now, so not coming down from the March low here, but this smaller one, I'm taking this point here as my A point, the beginning of the move. The end of the move, of course, is here on up here at 123.25-ish, there 123.50 area in the first week of January. Then the pullback, so this is A, B, C, and then when we project up, here, this will take us up to 38.2 is the year's high, and then the 50% is here, 61.8, and 100% is right up there. 128 is where it is, and that would be right up through the high here. So even this little pullback here, this is going back to the weekly chart, A, B, C, that's what I've just been measuring, projects on beyond this. So I do, you know, my call is on this, that the euro is going to push ahead quite strongly, and that will dominate the first quarter of this year, that move. Moving on now to sterling, to cable, grinding its way higher. I'm not saying powering away in the way I would have liked and hoped, but it is moving ahead. Of course, the big breakout was of this 1, 2, 3, 4 significant tops from 2018, forming this bottom. You can call it a reverse head and shoulders, but it's definitely, we had this very, very clear resistance level at 133. Everybody saw that. We've broken up. It's been quite volatile. You see these ranges are very high, and we're moving towards, as we expected, the double top formation from 2018, these two highs here, and that small double top, relatively small double top, ended the big advance for 2016, 17, 18, and started the fall, which was culminated at the March low in 2020. But we're on our way up now towards to test this level. So no surprise that we do meet resistance. We are meeting resistance here. It is a little bit of a struggle now to make further progress. So though we've got that channel, look at these highs here. They're falling short of the red line, the top of the channel here. We've got loss of momentum as we go up here. So it is finding it harder to advance. So though this high is higher than that, so we're close to a new high, it has lost momentum. So I kind of think that although this market, the cable is looking like it is moving up and is going to continue to move up, in the shorter term, the struggle it's having now and the loss of momentum indicates that it can easily pause here, can have a pullback. It can you know, it can still be in the range if it's above 134.75 currently here. We've got a lot of support around here. We've got support from the September high. So I think there's a lot around to stop it falling, but it's this struggle that it's having right now, I think will mean that we will consolidate a bit more before moving up. And this is reflecting itself in this sterling euro chart. Here, And so this is sterling versus the euro here, and it's had been going up nicely here, powering ahead nicely, but we've hit some resistance levels and it's exerting itself, and so I think that this is going to stall for a little bit. But don't forget, the trend is up in this sterling to outperform the euro generally, but the impetus, the power part of it seems to have been lost. But I think it's only an intermediate pause in it. You know, this is a very small divergence. It's not a major signal of the end of the trend or anything like that. Not at the moment, anyway. Moving on now to the Swiss franc. So the Swiss franc touched the 2014 low of 87. I'm sorry, this is the wrong chart. Come up when I tapped it. That's rather annoying to talk, have the wrong picture while I talk. So here it's the US dollar, Swiss franc. So going down is the Swiss franc going up. So we touched the 2014 low at 87 down here, and now it's started to consolidate. We've got a clear set of tops across here. Dollar tops at 89.20, let's call it there. So what does this look a little bit like, this consolidation that's occurring below the very significant 90 level, that level which held us from last summer through and seemed to be very significant to the Swiss National Bank. It allowed it to go through, gently through, and now it's consolidating here below it. So we've got a clear level where we can say that it's going to make another attack up. If we break through this 89.20 level, then I think we'll head back to the 90 level. But the resistance there is just enormous. Dollar resistance there is just enormous. I find it hard to believe that it will keep on going much further. I would watch this trend line, so we can extend that right back here. That is a long trend line as it happens. Here, that's also at 90. So if we're going to break up, then I think we could move quite swiftly towards 90, where we will get to substantial resistance. This pattern would then be calling a reverse head and shoulder, shoulder, head, shoulder, but it isn't a reverse head and shoulder yet because it hasn't broken the neckline. So this does look as though there's more correction, potential correction here, or a consolidation to continue. Now the favorite of many people, the Norwegian Crown, has been the recent leader in the against the dollar, but we've got some stalling here too as well. So this is dollar falling here, and this is Crown steadying. But we've got these two lows in place. I'm not calling it a double bottom yet because it isn't a double bottom unless we break this high here. So the W shape is not complete unless we break that, and that will give us a higher, much higher minimum price objective for the move. I just want to peep at the weekly chart quickly to remind us, you know, what enormous support we've got down here, dollar support that we're punching into here, which is going to make downward progress for the dollar, upward process for the Crown quite increasingly difficult for it, despite the fact that the Crown is so bullish. So I think that really it's going to really form some sort of base around here, probably grind a bit lower overall, but really the easy bit, this bit here, is behind us now. It's come back to massive support. So, you know, this might be something that might be moving off your radar now, having been so, you know, such a great trade for so long. The next, rather than go to the yen, I'd like to go to the New Zealand dollar versus the yen to cover two in one go here. So let's just go to the weekly chart firstly of this. So this is New Zealand dollar, Japanese yen. So going up here is the New Zealand dollar outperforming the yen. I see this as a big consolidation, flaggish pattern here that hasn't got a downward slope. This Fibonacci projection is from this low here, the March low, A, B, back to C here, and then projected up. We're at 50% Now it's looking good, I think, at that level. It's passing through resistance levels, and I think that, we got resistance above at 76.15 or so. Then I think, it's heading to above 80, where it does hit in very, very important and substantial resistance from 2016, 2017 double top formation there, or descending triangle formation there. That's very stiff resistance, but I do think we can make further progress. So that's the big picture on it. The daily is, we had this breakout, which I was very excited about. We retested it, pushed ahead, came back, retested it very hard, actually, much harder than I thought, but powered out of it, I'm pleased to say, here. And so New Zealand dollar on its way back up again here now. I think we can do some measurements, short-term Fibonacci measurements like this one, A, B, C, and then up to D here, swinging us through this high here. So I think that the reaction here is another one where the reaction is complete and the trend is actually at the beginning stages of reasserting itself now. Going now to the Australian dollar. So going up here is, of course, the Australian dollar rising. The Australian dollar is moving up in this narrow channel, but it's now testing the bottom of the channel, having had this bearish divergence here, warning us that we were losing power in the move up. In this stage here, we were moving up with higher highs in the RSI, but then we started to get a bearish divergence with lower highs here, warning us that the run was tiring. It has lost power significantly, but I don't think there's any major top in place here. I think it's pausing in its journey towards a substantial resistance, which we can see from the 2018 high, which is here, this double top pattern here. We haven't quite reached it yet, and I think that we can continue to make progress up towards the retest of that. If we break it, well, this is going to be, amazing. I've done the measurement in case it does break it. A, B, C, that would be 61.8, and the not minimum price objective, but the resistance comes in at 86 through that double top there. All these things are possible. It's very, very bullish, that one, but it's got its pause, which I think is complete, and we're on ready to continue up in this channel. So the big thing is to watch this channel, make sure it holds. If it doesn't hold, and so that this bearish divergence develops, then look for the channel width for the pullback, which should take us down to here, which will be back to, unfortunately, back to this resistance level here. That's possible, and without destroying the bullish case for it. But I do think this market is strong enough not to actually make that, test.
Okay,
now here again, another strong one, Canadian dollar. So this falling chart is the US dollar falling. Once again, we saw the bullish divergence in the daily chart here, the loss of momentum here. We are still in a downtrend. It's still intact, but we've got these rising lows in the RSI with the declining lows, and so it's just losing power in its fall. The downtrend is still intact, as I said, and it should prevail overall. I'm watching for any sort of complex bottom here, double bottom, reverse head and shoulders, those sort of patterns, maybe wedge, I'm not sure, but I don't really see the bottom in place yet. I still see further to go on this because of this. We've got this very, very powerful downtrend. It's intact, and really these support levels are not that significant, and so I think that we can go lower. Here, I'm going to move that there. It's still bearish on there. So yes, it's not a straight journey from A to B, but it's got a powerful trend behind it, a strong wind behind it. It does meet support as it goes, and it pauses and loses some power sometimes, and I really think that is what's happening right now. But I'm very hopeful this short-term downtrend will be sufficient to stifle any rally in this market and make this loss of momentum just a pause in the market. So let's move on now. I've talked week after week saying more or less the same thing on the Mexican peso and the rand is the last time I'm going to say it. These were great trades last year, but this is now the rand. Look at this on the weekly chart. This is what we're doing. We've come back to this big multi-year area of support. We bounced at it 14.5, and now it's starting to consolidate. And I think that is what will continue here. We will continue to consolidate here. We've had quite a big bounce, but I think the big bounce is part of the consolidation after this fall. And I think it's going to struggle to make much further progress. So the sort of game over for this particular one. Mexican peso. It's not the same pattern. It hasn't bounced here. Let's just remind ourselves of the weekly pattern. Down. That was brilliant. But now we've come back down to this, and this is a floor for it. It can go deeper into it. Could go down to 19, then it'd be in the middle of this floor. I mean, that's quite a big move, that's for sure. But it has lost a lot of momentum, hasn't it, here on the weekly chart. So I really see this consolidation here continuing, and really I'm going to put it off my radar now, so we won't be mentioning it in future, because it's just hitting into the mattress. As I said, it's fallen and it's hit the mattress, and now it's settling down. All right, let's move to the big market, the Bitcoin. Now Bitcoin had this symmetrical triangle. In my view, that's what we had. There's lots and lots of chat about this, but we had the 3 points here. We broke down from it. Now the count down from that was right down to here, 24,000 or 25,000, which it has not so far not done. So despite having this pause, which was to be expected given the divergences, we had the warnings, we talked about it here, about the divergences in the market in this phase here, and then we got the volatility forming this triangle, breaking down from the triangle, failing to meet its objective, and seemingly starting to steady up already. So just look at this in the weekly chart here. This is occurring at 161.8, a level we talked about right back here. Right back here, we first mentioned that. We mentioned 22,000 as the 100%, 33,000, 34,000 as the 161.8. So it's hesitating at that level. But this chart is very bullish still. We've still got higher highs and higher lows in the RSI. The MACD is still positive. I really feel that the fact that it hasn't fulfilled the downside objectives. When the bears had control, the bulls seem to be rushing back in. We'll know better by this time next week, and even by the end of the day, whether this white candle develops into much more. But it looks like it's stabilizing after its pullback, and people seem to be keen to buy, to rejoin the game, buy the dip strategy, which has been so profitable up till now. So 34,000 is a short-term resistance level, today's high, and this high on the 22nd last week, and a break of that would probably release the energy to take us up and through the consolidation of the triangle itself. But I think the overall picture is still bullish for Bitcoin. Okay, now Trevor, moving on to
Trevor,
yes, indeed, Dan.
No, I just we haven't had any questions so far. I just want to remind people that they don't need to be shy. If they have any questions for you, please feel free to ask them in the questions tab. I'm standing by to take your questions. So please don't be afraid.
Absolutely, Dan, and everybody, please ask questions. I invite you to do that. I am going to continue now with precious metals, crude oil, and the stock markets. And a little word about the stock markets. That's what I'm going to do in the last 6 or 7 minutes that I've got left. But if you've got any questions along the way, or want me to go back and look at something, or miss something that's important to you, then please do ask me. Okay, so next thing I want to talk about is gold. In fact, so let's look at gold. Gold is really consolidating and ranging. It's a bit surprising that it's really got no, I know if you're in it, it won't feel like this, but I would have expected it to have much more volatility and energy in it. Some of the daily ranges are very big, that's for sure, but it's all ranging, isn't it? We've got a new range here, There is resistance at 1880, support at 1810, but that's all happening inside a bigger consolidation resistance, which has got generally a slightly downward bias towards it. So this is not as exciting as I would have thought it should have been, given the background of the weaker dollar. Going on to I want to just say about silver gold ratio here. So we're always watching that. So gold silver, to put it round the right way. So if period here where we're going down, that was the silver outperforming gold, and again we're drifting in that as well. And I would also add this here. I've drawn your attention to this before. This is gold versus the stock market. If it'll come up, it will. No, I'll have another shot at that in a minute, just to show you that that has broken down. So gold underperforming the stock market. You're better off in stocks than in gold, US stocks than in gold currently, and that's a significant break. There was a period of outperformance, but it seems to me clearly to have broken down. The S&P, it's it broke to new highs again. It's it's relentless, this advance, isn't it? Really, it is incredible. We struggle away with difficult things like gold, but really the easy things are right under our nose. The US stock market. It's a powerful run, and it just look at this weekly chart just to remind ourselves what this is from the March low. Look at this here. How big, it was fast at the beginning, sewed up a bit, hardly stopped at the top there. Now we look back on it and it's powering ahead strongly there. I've drawn the Fibonacci projections starting from the March low, A, B, C, and then projecting up from there. And I think that we're going to get to these there. I am always drawing bearish divergences in. There is still one. If we fall away sharply, I can say, well, we were warned by the bearish divergence there, but I don't know. The MACD is still quite positive, and I shouldn't ignore it, because look back here, that one there, and what that developed into. But it's there, so let's not ignore it. But everything else about it, shorter term, is still steady and looking good. Higher lows pattern. There's plenty of short-term places to place stops if you need to, and if you're feeling nervous. I'm always nervous, it's climbing a wall of fear. But the Fibonacci measurement that I did there before, the target is minimum price. The resistance for that is 4,500. So bear in mind, there are many danger signals out there. The breadth is not what it should be. All sorts of things like that people will say. If it sails off hard, that was the case. It was always obvious. But the problem is they've been there before, and we just ground on higher. FTSE is really disappointing, considering that it's got the benefit of the sort of slight underperformance of sterling. But there is support at 65.50, that's for sure here. At 6,600 actually, a little bit higher. No, 65.50 here. So we've come back to retest that, and that should be enough to hold it and stop the sell-off developing into anything substantial. I'm really much more mesmerized by the longer-term picture here, and this flag A, B, and then I'm adding AB to this pullback here, and that gives us, I think, we're headed up to this consolidation here. I put my cigar here on it, and 7,100 area, I think we're on our way to. So this is just part of the pause of the journey up towards that. It's like many other stock markets, but it is not as strong, as some of the other ones. The one that I've always telling you that I love so much is the Japanese stock market. This is the weekly chart of it. It's phenomenal. If you want to see how phenomenal, I'll put in the last 20 years of it, and actually longer than that. It's really amazingly 1980. Let's go back to there. Okay, that's what we're doing here. Look at this. We broke through this pattern here. This was so significant. This was a pattern which had developed since 2017 with all those very big stops. We burst higher. Think of this in a fractal way. Imagine this as a daily chart. Where would you think it's going? I'd say it was going to this high, wouldn't you? And that's a high of 1990. That high there. So and you know the big run upwards in that, which was so phenomenal. You won't remember it, but I do. So 100%, we're at it now from my projection. So pause expected, but I think we're on our way further for this one. So there's not many charts that I can make a range like that. So forgive me, I'm going to go back to 5 years. So for my next chart, but on the daily chart, well, we've got you know, a triangle formed here. I hope and expect that this will resolve itself to the upside. This line is steeper than that line, so the bulls are stronger inside the consolidation than the bears. It's just a pause, one of the many pauses that we'll have in that long-term journey. But we've got that consolidation there, A, B, C, D up here for it. So we're still short-term, long-term, intermediate-term, long-term. I think we've got further to go. I think the lead is coming from the east. And actually, if you want to really leverage it, it's in the frontier markets, Vietnam, those sort of places have got the most bullish charts. Then the final word, we've got a lot of results coming out this week in the tech area and things, so it's going to be a busy week from a fundamental perspective. But I really want to talk about Amazon because I talked about Amazon before, forming this triangle. And last week we were testing the bottom of the triangle. I was a bit worried about it because I'd seen some weaknesses elsewhere, like Facebook, and maybe Amazon might break down. Well, it didn't. You know, we drew our line well, and it didn't break down. And now 1, 2, 3, and we're testing today the upper side of this line. So this turns the whole technical picture the other way around here. Let's look at the weekly chart of this. You know, this could be potentially really very significant resumption of the uptrend, ending the sort of pause in Amazon. You know, amazing to say this after being such a leader, but breaking the downtrend line in the RSI, close to breaking the top of the pattern, which should release a lot of energy. We can, the initial minimum price objective will measure the width across here, 1, 2, 3, 4, 6 and a bit higher, hundreds, 1, 2, 3, 4, 5, 6. Well, that's 4,000, isn't it? So that would be the target, the magnet, the big round number of 4,000 for Amazon. If we can clear this, which I think we will either fail and continue to oscillate inside the triangle, but more likely break to the upside and make this very significant chart breakout of this very significant bellwether stock. All right, Dan, have we got any questions?
Trevor, thank you very much, as always. We did actually have a question, but I think I was able to answer it myself. I'll just read it out for you. It's from Gregory Amos. Thank you very much for your question. He says, I have a more theoretical question, if that may be permitted. Why isn't the Chinese yuan a considered or significant market? Well, we don't talk about the Chinese yuan mainly because we don't offer the pair, right? So I've made it clear that this is something that we're hoping to offer in the future. But do you consider it an important market? What do you think? When we start offering the yuan, do you think that you'll want to talk about it every week?
I will, and it is and it isn't. Gregory, that's a good question actually, because you would think it should be. But the problem is that it is not the reserve currency. You know, still, you know, if China buys coal from, well, it stopped doing it, but when it was buying coal from Australia, it paid for it in US dollars. It's still the sort of exchange currency for international trade. You know, when coffee is traded from Brazil, it is and bought by Europe, for example, it goes through the US dollar, not the euro real. It goes real to the US dollar to the US dollar, and so you know it's still the leverage for trade. You know, but there's a lot of talk about how long will this last, and do we want our the control of the currency of the world, if you like, for trade. Which, you know, when Saudi Arabia sells its oil to, you know, to Turkey, you know, why it does it really want to go through the US dollar? The Trump administration was, and the Federal Reserve, all those sorts of things, going through the Federal Reserve in New York, which it has to do to settle the contract, and things. So there's a great deal of push back against this, but still there's friction there, and it doesn't change. And in the background, you know, we've got digital currencies, and you know, and China making very, you know, I think that China realizes if its own currency is going to take its place in the as a global currency, it will be in a digital form, therefore offering a clear advantage over the US dollar, which is so undigital. It's archaic in its settlement structure, 2-day settlement in the US dollar. So you know, it's got a chance really of sidestepping the US dollar just by having a more convenient currency, but it would be a digital one there. So I think that in the future that will be the case, and but it isn't. I don't think the yuan really has its status that it should have. That's what I'm saying. You know, so given the size of the economy and the rate of growth of the Chinese economy, and the fact that it's going to overtake the US pretty soon. And all those things, you'd think its currency would be much more dominant in the world, but yet it's the dollar next to the euro by a long shot over the Chinese yuan. So I think that one day we'll be saying something different, but it's definitely something to trade, and I look forward to being on the platform.
Yeah, well, this is something we're obviously working towards. We're always trying to offer new instruments at the moment, but as we said, not at the moment at FX Choice. And also Gregory says, thank you very much. Pass on that.
Thanks Gregory, for the question, actually.
Okay, well, we don't have any more questions, Trevor. I think we can wrap it up for the day. I just want to remind everybody that the recording of the whole webinar will be available on our official YouTube channel in the next couple of hours, depending on how fast we can get it edited and out there. So if you have joined us late, you can always go back onto the YouTube channel and watch the webinar again. If you've got anything to add, Trevor?
No, not at all, really. Thank you very much indeed, everybody. It's a very interesting week. To some extent, I'm a little bit relieved that some of the longer-term trends that seem to be reasserting themselves. It was a bit of a wobble in the market, and I sort of wondered whether I was right about things and the longer-term trends, but they seem to be reasserting, and that's good. I hope next week I'll be able to go back and say, yeah, there we are. Dollar weakness and all those things sprung back. But just watch the US stock market. This is always going to surprise you whenever we get our next big March sell-off like event. It will be a surprise. You know, that's what makes them so violent when they happen.
Okay, right, well, thanks. Speaking of next week, same time, same place as always. Thank you very much.
Thanks very much, everybody, for joining us. I appreciate you spending the time with us. May the trend be with you.
Thank you very much, Trevor. Bye-bye, everyone.
Bye, everyone.
Bye.